So here we are on the evening of Wednesday, the 19th of July, 2023, and the time right now is just getting on about 5:35 p.m. Central Time. First announcement, I will not be doing updates on Thursday, Friday, or Sunday, so you won't be getting any of those. I will be finishing up my vacation. Not going to be near computers tomorrow, so I just wanted to get this all done for you now and just not disappear. So please remember that. Don't write, where have I gone? I haven't gone anywhere. I'm just finishing up a vacation, and after this one, I don't have another one planned at this point. So this was the last one I have planned at least this point. Don't know what will happen later in the year. Might want to go away for Thanksgiving like everybody else, but we'll see about that. All right. So one of the things I wrote today to people was be careful in the stock market. You know, this looks to me like it's getting a little long in the tooth, stretched out. You either go for new all-time highs or you're going to back off here, and I wouldn't be surprised if you back off. I don't feel that way in the metals, though. I feel that in the gold market, you can back off a little bit, but I don't think there's any reason to really drop. I was impressed today that the dollar, in fact, was up 36 points, as you could see here. And yet, what did the market do? The market was actually higher. Now, remember, the dollar's not open right now, but you were up in the gold today, as you'll see. The copper market has nothing but problems. I don't see China biting the bullet on anything. John Kerry today was basically given the high sign that he can talk all he wants. China will do what they want on climate change at their own pace, and they don't need the U.S. guidance or cooperation to do whatever they're going to do. Yet they contribute about a third of the world's pollution. But that's how it's going to be. In other words, China does what China does. And if you think that it's niceties between the U.S. and China, it's a first step of niceties. And it is not nice yet. We are not bedfellows by any imagination. So, as we take a look here and we try to get a feel for gold, the first thing that comes to my mind, at least, is as I look at the market, I can see in looking at things that the market is staying what? And fighting at the 18-week moving average of closes. We talked about that. Will the market be able to come up, and let me just take this pointer here. Can't wait till I'm in front of the screen and we don't have to do this. And be able to stay over that number. The number's 1973. We're at 1980.20, but you have two more trading sessions, and we'll find out if it can do that or not. When you look at the daily chart, you can see how the market has come back up. It is somewhat in a resistance area, and one of the areas is right here. This is how I'd be looking at it, right through all of this, from this high right across through there. That is not necessarily an important zone, but it's a visual one. What you do have is an uptrend marked by the swing line, making higher lows, higher highs. You also have a market that is fighting a battle at the 100-day moving average of closes. You see that right through here, coupled with the upper Bollinger Band. And as I told you, that would not be an easy task to just pick up and run through. That's going to give this market something to think about. So I think that the rally off of this low that culminated in getting to this high right up here, maybe that's enough for the market to now have to consolidate things. As we take a look at the combination of slow stochastics, are they embedded? So let's take a look. To embed, you have to take the market, and I'm going to move this over, and get at least 3 days in a row where you have both numbers over 80. Don't have a look on the left. 75.93 is not over 80. Day 1, 2, maybe today will be the third day, so I'll wait and see what it does. Coming back over here to the gold silver, you can see that you keep dropping, which means silver is stronger than gold. And I think you'd agree with me. You see that right here. This market keeps running at the upper Bollinger Band, and it is fully embedded. So on the first good break in this market, look for the pros to be a buyer. In addition, you are knocking on the door of the market getting another bullish setup with the 18-day ready to get over the 100. You're only 11 points away from that. Now, that would give you, when that occurs, the shortest term average, the 18 over the 100 over the 200. That would be considered bullish by moving average people. In the copper market, while the trend is up, you're back to neutral at the 18-day average. And what I told you was, I don't see pros wanting to buy here and putting a stop under the 372 level, which this is 372 and a quarter. That's way too much money to put at risk. I don't see people doing it. You need a better chart pattern. And also, the market had its run into the combination of the 100, the upper Bollinger Band, and the 200-day averages. And basically, it sliced through them and got thrown right back. In the platinum, I think you've gone up high enough to get a correction. Simple put. I'm looking for the market to back off, and I don't know how deep, but the 18-day average wouldn't surprise me. You can see how we came up here. We're just overbought, really not doing anything that I think is super exciting one way or the other. As we step into the dollar index, the dollar looks to me as though it's still a bear market rally now. Why? You were under the Bollinger Band and you will move to the right-hand side because only 5% of the time do you stay outside of the Bollinger Band, staying under or over. In the process, you have embedded. Until this is lost right here, I look for the pro trader to be looking to sell the rallies in this market anywhere between a little bit higher up here into this general zone and then see if the market can resume on the downside. While I'm gone, you should take advantage of the free offers that we have. You can get to them by clicking here. The education on the Bollinger Band course is right here to give you an example. And here you can see all the different courses that I do offer. And once you click on them, they're all explained for you. And I think that you'll find that that's the fun of it. If you were to just click that, it'll start telling you how the course works, what goes on, everything that works through it, the indicators that I include with it, and so on. To find out more, just go to our website by clicking up on the top and then take advantage of any parts that you see right here. You can always also just go to iraepstein.com. It'll land you on our homepage and away you go. I'm Ira. I will see everybody Monday. Thanks for being with me, and I will see you then, hopefully a lot more refreshed. Take care now.